Welcome to Bears in Exile. Today is Monday, February the 25th, and this is a quick hit on the indexes. Looking at a whole bunch of stuff. We have a lot to work with tonight, so I'll just get right into it. And here we are with the Dow. Fantastic day on the Dow. Nice big down. After Thursday, we were saying that we wanted to have a move up. We did get the move up on Friday. It was a little bit more than we wanted, but we were happy that we got the move up. Today, a little bit of a curveball. It went higher, but ultimately just totally crapped out and absolutely fantastic. So the question becomes more or less. I do think odds are extremely good for more, and here's why. We have a new recent low today. Excellent, very bearish. We bested the upper price consensus level, also good. We penetrated into the long-term moving average bar properly, which is to say that we did not gap into it. Excellent. And I mean, things are not all perfect. We are a good ways underneath the lower Bollinger Band, sure. Boy, what else is there, huh? We have everything ticking down. CCI, stochastics, 14-day RSI moving average, RSI, MACD histogram, MACD, all down, all poor. And we have a rest of the week full of NDEs. Ben Bernanke talks tomorrow and Wednesday. The Italian Prime Minister results tonight or tomorrow. And the sequester taking effect Friday if they don't kick the can, which at the moment they're not doing too well with. So plenty of reason to go down, and everything is pointing down. What can you say? The only thing, lower Bollinger Band and coming into support with the long-term moving average bar. If we get a strong move continuing to the downside, it should get to the second to the last moving average right here. And that would be about 13,675 roundabout. So hopefully we'll get that. If we really have a waterfall and just run right through it, that would be incredible also. We certainly have enough room to do it on the indicators, but don't want to assume too much too fast, and we are getting into what should be some kind of support. This is a very strong long-term moving average bar. So anyways, that's what I'd be looking at. Going on to SPX. Fantastic. Very, very fantastic. We have more development in this than the Dow itself. Everything pointing down, etc., etc. We had talked the other night about, we had the uptick in the MACD histogram on several of the charts. We said that we were looking for it to tick up and then continue ticking down, and that's exactly what happened. Excellent. We have nothing in the heat map. There's nothing to really add to this except what we already know for in the Dow. Since this has already penetrated more, if we are able to totally bust out of the long-term moving average bar and slice through it, I think a proper level would be right here, the major price consensus level for this month, and that's right about, that's exactly where it is, 1468. That would be the spot, and I really would be surprised if it can take that out in one go. But if we have panic hit the market, anything is possible. So, moving on to the VIX. Wow, this is awesome. Everything's pointing up. We do have a blip in the heat map. We are massively outside of the upper Bollinger Band, but this is what the VIX does, either when it ends a move or when it starts a move. So, I mean, last recent example, December, look at this, almost the entire bar outside the upper Bollinger Band, and then it continues on its way. Is that possible at this point with the right news? Absolutely it is. So I don't even know what a right target for this would be. I mean, I would imagine up here at 23, but this one is a little bit crazy. The other really positive thing besides all the indicators is we bested the 200-day moving average today. Closed above it, very strong. I'm sure it's possible that it could come back and kiss it again. Hopefully not fall through it. But, this is a positive sign. This one is wild, but taking it out in one go, fantastic. And we'll look at the internal structure of volume on all of these in a moment. And going to TNA, excellent. Massively bearish engulfing. This is ugly, very, very ugly. Nice penetration into the long-term moving average bar, barely below the lower Bollinger Band. Everything is pointing down, and major price consensus level right here at 70, just a hair above 70. That would be that'd be a really nice target, but we'll see. I mean, so much news-driven, but now to look at something that is very interesting. Internal structure of volume. Oh, sorry, volume at price. I'll fix that in a moment. But look at that. This is where all the buying should be. Some really good support right here at 70. It's already busted all of this. All of this, all in one go. Amazing. 70. A little bit above that too, but 70. All right, internal structure of volume. And check this out. This is pretty cool. It's actually a little bit scary. But anyways, we've been saying for a while, accumulation distribution, on balance volume. The two biggies. We're about to have a third red with the volume price trend about to cross. And notice we do not yet have on balance volume or accumulation distribution. We're very, very close on balance volume. We are not pointed in the right direction yet for accumulation distribution. And what does that mean? That means that the real selling has not started yet. If we're going to have a waterfall event, those should accompany it, in which case we'll most likely have 5 reds. But in that case, you should easily be going down here to fill this gap right here and possibly lower. All depends on the news. Looking at the SPX, because this one is different. S&P 500, massively bearish engulfing. And what do we have today? We have a cross of the on-balance volume. How about that? So that brings us to 1, 2, 3 reds, and one of them is one of the primary 2. We're very close to a 4th red with the volume price trend, and we are not pointed in the right direction or crossing on the accumulation distribution, meaning the majority of the selling has not yet occurred if we're going to get a waterfall event. So, and in this case, going back and filling that gap will take us all the way down here to just above 142, but I would actually find it more likely that this would be the area, since you'll have the 100-day moving average going up here, which will coincide with the top of the gap window. Certainly I would like the gap fill better, but just trying to be a little conservative. And looking at the Dow, you can see here also that we do not have the unbalanced volume or the accumulation distribution changeover yet, so there could be a move up tomorrow of some degree. Hopefully it'll be small. Hopefully we'll just keep going down. But in any case, the full extent of momentum to the downside has not commenced. Has not. So very encouraging if you're bearish. And I am definitely bearish at the moment, although I'm ready to flip on the dime if we hit some kind of a support and just bounce. Hopefully that will be a significant distance down. In the case of 50 simple moving average on the Dow, that would be about 13,600. I would be very, very pleased with that, but with any target to the downside at the moment, I want to reevaluate them at each target reached. So I just don't want to make too much of a whole bunch of targets. Just kind of want to mess with them each day and that's that. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.